Hello, my name is James Neathery. Welcome to the Banking with Life Q&A series. This is where I answer questions that you have concerning the infinite banking concept. So let's get started. Do you recommend the retirement strategy of taking policy loans once the policy is mature with no intention to repay, since they'll be canceled by the death benefit? So since the loans will be canceled by the death benefit. Do I recommend that? And on a case-by-case is when and how I make recommendations. Can you do that? Yes, you can do that. So when I get into retirement, can I take passive income through loans? Loans are tax-free, and just let those loans compound? Yes, I can do that, but you have to know how to manage that outstanding loan. You have to have mastered loan management by that time, because if the loan out compounds the cash value, that's a train wreck, and you're going to have a taxable event in that year, and it could be tragic. The goal going into retirement or passive income time is to have no outstanding loans if you're going to use that policy as passive income. And there's two ways to do that. You can do the passive income through loans that are tax-free, and you can also take passive income from life insurance through withdrawals. They both have their own results and effect on a particular policy or on a policy. The next question, do you use term riders in your policies to boost cash value in the early years? Why or why not? Yes and no. The individual, their situation, what they're doing, what they're trying to do, the construct of their finances dictates how a policy should be structured, and their insurability. There's a lot of factors that go into a design of a policy, in my opinion, and we're pretty particular on structure of a life insurance policy. So the short answer is yes, I do, and there are cases where no, I don't. And there'll be more work in future podcasts on that exact question, to use or not to use term riders. And if I can make any addition there, Nelson Nash did not use term riders in his book, Becoming Your Own Banker. You will not see a term policy in there or a rider. Does that mean it's bad? No. Can you do other investment recommendations and how to use the infinite banking concept with them? Okay, I do not give specific investment advice or recommendations unless we have a client advisor relationship. So none of this is meant to be investment advice other than this. You are the greatest asset that you have, and you need to invest in yourself. Education, knowledge, health, invest in yourself. That's the number one asset that you have. Now, as we work with clients, do we consult with them concerning how do they integrate the infinite banking concept into everything that they're doing? Yes, we do. All right. I listened to the most recent podcast, and you guys mentioned information or questions can be sent to below. But if I listen on my podcast app, and thank you for listening on your podcast app, and thanks for this question because I was unaware of this. I don't have this. So if I listen on my podcast app, I don't have this. Can you read the info out loud next time? Thanks, and keep up the good work. You're welcome, and thank you. So if you have a question that you would like answered, send the question to james@bankingwithlife.com. Okay, that's james@bankingwithlife.com. Who determines the interest rate, me or the company? Now, I'll make an assumption that the interest rate being asked about here is the loan interest rate. And if that's true, the loan interest rate is set by the company. What interest rate you pay back to the company is your decision. That's within your control. But if the loan charge is 5%, you're going to be charged 5%. And you can pay back at 10 or greater than 5. And whatever you pay back above what the company is charging you, you're going to tell the company what to do with that money. Do you pay down the loan faster, or do you just pay the loan back principal and interest and have the additional interest above 5 in this example? Does that get applied to your policy? You have to instruct the company on what to do there. So you're either going to pay down the loan faster because you're paying a greater interest rate than the company's charging you, or you're going to pay the stated charged interest rate by the company and pay principal and interest. Additional interest would go to your policy if the company allows that. That additional interest is what you're calling interest, additional interest. It's premium to the company. All right, so it adds to your basis, adds to the efficiency of the policy, and it also is additional capital to your system. But the company charges a loan interest rate that they charge, or the company determines the loan interest rate that they charge you. You determine the interest rate in which you pay back. Okay, in this question, do you work with Canadians? I know things are a bit different up here. Thank you for the question. Yes, we do work with Canadians. There are particular requirements that have to occur when working with non-U.S. citizens. But, I love the Canadians, and I'd really like an invitation to go ice fishing sometime. I'm just saying. So the short answer is yes. Thank you for watching. If you have a question that you would like an answer to, email us at the email below. And be sure also to like and subscribe and join us weekly for content. Have a great day.